Good evening, this is Brian Shannon from Alpha Trends Blogspot. It is Tuesday, the 16th of January, 2006, and we're going to go ahead and take a look at some stocks for trading on Wednesday. Keep in mind, once again, I'm not checking these stocks to see when earnings are due out. If I think that it warrants a hold overnight during the course of the day, then I'll go ahead and do it. But I'm also not going to post that on the blog either. I'm just not interested in doing the work. So if you are interested in holding these stocks overnight, be sure to find out whether or not they are due to report earnings, because the consequences could be drastic if they do report and they miss in the case of a long. Looking at the first stock for tomorrow is Apogee Enterprises, symbol APOG. We're looking at a weekly time frame first. And you can see here the stock broke out past resistance from last year, and on the monthly time frame, looks like it's at all-time highs here. Just a nice pullback here over the last few days, and we did have heavy volume on this day, but it's stabilized in there. Normally, if it pulls back on heavy volume, it gets my attention, makes me a little bit concerned. However, it's been holding in this area. So what we're going to do is we're going to look for strength on this stock and look to buy it above $18.40 tomorrow. If it gets above $18.40, I think you can put your stop at about $18.15. So there's only a risk here in this case of about 25 cents. And what I'm looking for on the upside is a target of about $19.50, right up around in this area here. So that would be a 25-cent risk for the potential to make, in this case, about $1.10 or so. The next stock I do own a position in. I've been in it for let's see, let me type that over again. It's called Emdeon Corp. I actually bought it on this day here and got lucky with it, but it's been holding up really well here. It's got a little bit of resistance up at about 1302, and this is the symbol here is HLTH. You can see that the buyers have been getting more aggressive as this rising 5-day moving average starts to catch up with the stock. So I think that getting above 1303, that the upward momentum ought to continue. Once in this stock, I think you could put your stop at about $12.84, or down around this area here. So that'd be a risk of about 21 cents. And to look for a price target, we've got to go way back to the monthly time frame. You can see that this stock has done a whole bunch of nothing for a few years, but I think that a minimum upside target that would be reasonable is about $14 a share. So here we'd be risking from the 10-minute time frame about 21 cents, and our upward objective 95 cents away. Makes for a nice risk-reward ratio. Next, we're going to look at shares of NetEase.com, symbol NTES. And this stock got back above its 5-day moving average, which flattened out. This little resistance area became support here late in the day. Looking at the daily time frame, you can see it's been having a little bit of trouble with this 200-day moving average. But it looks to me like the buyers are taking back control. It's been banging away at this area in here recently. I think it looks ready for another push higher. What I'd like to see the stock do would be to get above 1905. That'd be about the midday high right in here. So above 1905, you can look to buy this stock with a stop at $18.78. We'll put it under the afternoon low right here. And that would be risking 27 cents. And my upward target, about $20 a share. So we'd be looking for 95 cents of upside with just 27 cents of risk. I've got a nice little stock here I'm going to mention at the end as well. But before we do that, let's take a look at Anderson's Incorporated, symbol ANDE. Now this stock is been consolidating. Looked like it tried to break out over here. That failed. Now it's back below all these moving averages, and I think it's ready for another drop down towards about $36.50 a share. What I'd like to see happen for a reasonable short to set up in this stock would be for a rally up to $38.10, right around that 5-day moving average, and then to sell the stock short below $38 a share. Our stop in this case would go at about $38.26. So 26 cents of risk, and I think the stock ought to drop down towards about the $36.50 level. So 26 cents of risk for maybe $1.50 of opportunity, hopefully. Shares of JCOM, JCOM, I call it JCOM. It's J2 Global Communications. This stock had something happen to it. that broke it down below this trend line here on a gap, and you can see that that trend line is pretty significant here on the weekly time frame as well. So it looks like it's trying to hold in there, but the volume is really starting to dry up in this stock. We've got the 10, 20, and 50-day moving averages all declining. So I think the burden of proof is on the buyers in here. What I'd like to look for in this stock would be a slight rally up to about $28.55, and then to sell the stock short below $28.40. Our stop would then go at about $25.62, and that gives us 20 cents of risk. To me, it looks like it ought to test this recent low down near about $24 a share. So on paper, it looks like a good risk reward of 20 cents of risk for the opportunity, hopefully to make about $1.40 shorting shares of JCOM.